Hi, I'm Kevin Frobus, a partner from the IFRS advisory team in Sydney. This month, I'll be looking at the lease accounting standards and its interaction with the business combination standard. Now, these are two of my favorite topics, and the right of use asset that is being introduced by the lease accounting standard IFRS 16 raises some interesting anomalies when accounting for those acquisitions in a business combination. The new lease accounting standard, IFRS 16, has been spoken about for quite some time by BDO and other professional advisory firms. This standard is starting to have an impact on IPOs and other types of business combinations because of the interesting way it interacts with the business combination accounting standard, IFRS 3. Now, the general principle is that when an acquirer in a business combination acquires a lease, under the right of use asset model, that's the one dictated by IFRS 16, the acquirer must remeasure the lease as if it is the acquirer's own lease. This starts to play with the discount rate and how the discount rate interacts with the remaining lease payments that the acquirer is responsible for. But of course, nothing is simple in the accounting standards, and so different types of schemes and different types of arrangements will have different outcomes. For example, when the acquisition is of a separate business, not in a vehicle like a subsidiary, generally the acquirer will reset the discount rate for the lease liability and the right of use asset at acquisition. This means that the acquirer's credit enhancements and credit risk profile must be taken into account. On the other hand, if the acquisition of the business combination is through a subsidiary, generally the lessee's original discount rate is continued to be used because that was the discount rate when the contract was priced. Now, all this technical jargon leads us to one conclusion, that this is complicated. And the article on this month's Accounting News delves into this concept, along with a number of structures that general business combinations often follow, and also an example to demonstrate the concept. Taking this a step further, acquirers are realizing that they may need to produce two sets of books and records to account for the leases acquired in a business combination. This is exactly the sort of task that BDO Lead and BDO Lease Management Services is designed to cater for. If you'd like to explore these services options, please contact an advisory partner in one of the offices of BDO, or look to the landing page that is available on the BDO website.